Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Thursday, October the 15th. The year's 2020. Let's talk trading. We're going to talk money management with Walmal today. But first, just so you know, these videos for educational purposes only. Your results may differ from mine and from Walmal's. Walmal, you counting the money?
Well, today's been a good day, so yeah, I've been stacking it up slowly. Not my usual way of doing it, but hey, it works, and I think that's part of money management to a certain extent.
Yeah, well, there's been a few questions out there on YouTube land and Facebook land and about money management. So maybe you can explain the way you do your money management.
So let me go and explain. I know I've done a video already on the 1051, and that's the core of what I do. And the idea behind that is, once I get into a trade, if I get up 3 pips, once I'm up 3 pips, I move my stop loss to -3. Once I get to 5 pips, I move my stop loss to plus break even +1. That way if I have to cover commission, I can cover commission. And once I get to 10, I move my stop loss to 5. And that's what I like to go and do. That's my goal, and that's what I like to do. But to be honest with you, today I haven't been able to do that. And there's some brain management that has to go into play with your money management as well. And so my money management today has been take my pips, and as soon as I see that, hey, things are not going my direction, take the money off the table. That becomes my money management for today, and that is that just because of the way the market's been moving, that's what I need to go and do. Now, because I did that, I've missed, a couple of really nice moves where I could have picked up. In one particular case, like 25, 26 pips. But, the part of the thing is, though, by doing that, by pulling them off the table, I also kind of kept myself out of a couple of things that have gone against me. So, there's money management. There's also a piece of it that's also psychological, because you got to go and make sure that your head is still in the game. You can't be playing the game if your head is just thinking about the money that you lost. You got to be thinking about, okay, what am I going to do right now, here and now? Now, hopefully that a roundabout answer, but hopefully that kind of gives some answer as a place as a starting point.
Well, maybe let's take it back one notch. Let's look at risk management. So let's just use some round numbers. If you had $1,000 account, what would be your risk on that account?
The most I would risk is one lot with a loss of 10 pips. In other words, I'd be willing to go and burn $100.
So that would that's 10% of your account. That kind of goes against what would you call it? Conventional trading wisdom.
Yeah, right. Conventional trading wisdom says never risk more than 2%. And when you're starting out, that may be a good idea. But the thing is, I look at it from another perspective, and I've got, I only put maybe $1,000 into the account, and the reality is I know that my winning percentage is high enough to justify that, so I can go and do that. If with the system that I'm using, I know I win 70% of the time. If I know I'm winning around 70% of the time, I can risk that much money. Now, if you got a system out there that, you're only winning 52.1% of the time, here's a reality. You probably shouldn't risk 10%. Maybe you are better off risking only 2%. But because of my win percentage, I'm willing to go and take that risk.
So, for a little recap here, $1,000 account, you would trade one lot at $10 a pip, and you'd be willing to lose 10 pips.
Correct. So, and depending on the method that I'm using at the time, because as many of the traders out there know, I trade Walmal. That's my bread and butter, I like to say. But I do trade one or two other things on as well. And my risk really is not the one lot. My risk is the $100. I'm willing to risk $100 on a trade. That's what I'm willing to go and burn. Now, I know some guys out there will go and say, well, this trade is a better probability, therefore I'm willing to go and risk $200. And other people say, well, this is a very low probability trade, and I'm only willing to risk $50. I don't go and rate my trades that way. It's the type of thing, if I'm going to get into the trade, I'm getting into the trade because I think there's a good chance I'm going to win this trade. I'm not getting into this trade because I got a 50% chance or a 60% chance of winning because, first of all, there's no probabilities in trading. All I've got is statistics. So I can't do that. And I'm not going to sit there and start playing this game while I'm trying to get into a trade, making sure that I'm getting into a good trade, and now putting a further thought on my mind, okay, now that I'm going to get into this trade, how much should I risk? And now start worrying about that. Maybe I'm just a simple guy and I just want to go and just, have fixed numbers, make it easy, fixed numbers, and just do it that way.
Okay, now since we're talking about risk management, if we were prop traders, there'd be some guys in the next room monitoring our account, and they would give us what referred to as a circuit breaker. In other words, you can only lose so much in a day, and then they're pulling the plug on you. So, do you have a circuit breaker amount?
I do. I'm willing to go and lose my max for a particular trade 3 times. So if I lose 30 pips in a day, I'm going on vacation. Because that basically means that I've lost, using that example of a $1,000 account, that means I've lost $300. I've lost 30% of my account. It's time for me to go and do a reevaluation. Not even a reevaluation, because the market can do that. It absolutely can do that, but at the same time, I need to stop, and I need to stop because I know myself, and my natural inclination is going to be, I'm going to get those 30 pips back, and now there's a possibility I'm going to start going in and doing some revenge trading. I can now start taking some trades that I normally would not want to take because, statistically, they don't make sense to take, and I'm now getting myself into deeper trouble, and I could wipe out an account. Now, I'll be honest with you folks out there. Before I was profitable, and I've been profitable now for a while, but before I was profitable, I wiped out 2 or 3 accounts, doing exactly what I just said, and I'm not going to do that again. I'm willing to go and say, you know what? I took a hit today. Today was a bad day. You know what? I've got money in my account still. I can trade tomorrow, and that's what I'm going to do. I'm going to go trade tomorrow.
So when you go back and look at those trades, let's say you had a losing day like that, what is it you look for when you're saying, what the heck did I do? Are you looking to change your system? Are you looking to see if it's the system or if it was you, or was it the market?
Well, the thing is, let me take half a step back. All the systems that I'm trading are based on statistics, and I rerun those statistics at least once a month, usually twice a month, or even 3 times a month, just to make sure the statistics are still true. So, for instance, with the Walmal method, I actually run that. I look at those statistics every Friday afternoon, okay? And that way I know, hey, it's still working. Great. Not only did I make money this week, but it also is still working. Okay, I'm gonna stick with it. Okay, so therefore I know the statistics are good, and because I'm a statistical trader, I know I'm in a good place. So if something went wrong, there's only 2 possibilities why it went wrong. Possibility number 1 is that the market just behaved badly this week. Just didn't do what the market normally does. And that's okay, because you're going to have weeks like that, and that's actually counted in the statistics. That's going to happen. Is there anything I can do about that? Nope, not a single thing. I can't do anything about that other than to continue on, because I know the statistics will go and swing back in the other direction in my favor. Okay, so that's possibility number 1. Possibility number 2 is I was not trading my system. I was not doing what I was supposed to be doing. I was jumping into trades late. I was jumping into trades early. I was, not waiting for a proper signal. And then on the exit part, I was getting out too early. I was not waiting. I was, or the other possibility, I was jumping out too early. I didn't follow my methodology. And so those are the things I have to look at. So the only thing I can change is, what did I do? The only one that's responsible for the trading is me. So I can only look at what I did. And I can go back, if I've had, bad days, just like everybody else. So the only thing I'll do is, at the end of the day, go back and look and say, hey, what did I do wrong here? What caused me to do this? I jumped out of a trade earlier with you, and I took like a 1 pip loss on it. looking back, I probably shouldn't have jumped out. I jumped out for psychological reasons. So I got to keep that in the back of my head. For whatever reason, I'm a little bit more jumpy today. I don't know why, but I'm a little bit more jumpy and a little bit more cautious today. Probably more cautious than I should have been, because I took a 1 pip loss, and I just said, I'm scratching this trade. Reality is, if I would have stuck with it, I probably would have picked up 5 or 10 pips. But for whatever reason, I did that. Okay, now I know that. So, knowing that, I can go and improve my trading and say, hey, follow the rules, dummy, because that's the only thing that's going to get me to the other side. Follow the rules.
Right.
Do you have a next question for me, or?
Oh, no. What I was thinking was, you actually gave me an idea. We're going to have to do a video and walk them through the statistics, because I know we're going to get questions about that. So, basically, your system's solid because of the statistics, and then so it's
right.
either the market or it's you.
Right.
What mistakes are you most likely to make?
My biggest mistakes that I make is I'll go and jump in too late. I know, and it's funny. I'll call you out a little bit, TRO, but your biggest mistake is you generally jump in too soon. My biggest mistake is I jump in too late, and that's just and I know that. So a lot of times what I'm trying to do now is, in fact, I use my notes indicator, and I have it up on the chart, and right next to the buy button, I've got a big note that sits there, are you too late? And it says literally right there, are you too late? And just as a reminder that, because I know that's what I do, so I just put that note there just to, I'd rather go miss a trade than to get into a trade where I'm going to go and get burned.
Exactly.
Or a potential of getting burned. So, but that's probably my biggest mistake is I get in too late, and then probably my second biggest mistake is on the exit side, and that is that a lot of times I wait too long to get out.
Okay.
So
I was going to ask you about that, though, because, the traders are going to be saying, well, wait a minute, if you're doing your Walmal method, how can you get in too late? I mean, because it's right there. You're either taking, like this hour, you either went short at 50 or long at 60. How could you be in too late?
Because I was silly. That's one. There's actually two possibilities. One is that I was silly and just hesitated. It got to the 50, and instead of pressing the button, is it really going across that 50? Yeah, it's going to go. Oh, really? Now it's at 52. It's 53. And next thing it's too far along. And then I jump in. Now it's only going to move. Let's say that particular candle is only going to move 5 pips, and I'm now in at 53, and now I get to see the 2 pips, and then I say come around, because my breaker is at +3, I can now run that all the way down to -7, and so now you're in trouble. So that's one possibility of how I get into trouble on that way, getting in too late. The second possibility is a lot of times on the Walmal trades, I don't put in a market order. Okay, and I just do it. I don't put in a pending order. I just do it with a market order. And sometimes what happens is it just moves too stinking quick. And so what happens is I hit the buy, but the market's moved it. So let's say I was going to take this trade right now at the short at the 30. Okay, well, you saw how quick that just moved there. I'm not sure if that's what you have on your screen,
right?
But it just moved like bam, it just moved. And if I tried to do that with a market order, I would have gotten in at probably 27 or 28. I already would have missed it because the market just moved that quickly.
Yeah, you know what else moves quickly is our 15 minutes. Yeah, we're almost up. So, okay, I hope you traders glean something from Walmal on the way he does his risk management, money management, and we'll probably revisit that subject more than once in the coming days. But so as you're trading today, just remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're here for the first time, welcome aboard. Click subscribe, click like, and then share the video all over the internet. This is TheRumpledOne, over and out.